There we go.
Man.
Yeah, it's so funny. I mean, people are sensitive. We went and saw a house today. I've been looking at property this whole entire time. And this was the first time I walk up on the porch and this guy has a box of sanitary gloves, like these blue medical gloves. And he's through the window and he's like tapping on the window. He's like, "Where's your masks?" And I'm like, it's in my car. Hang on. So I literally have a little construction mask with an N95 on it. So I go into the car and get my mask and come back and put my gloves on. And we walk through this house and give him we tour it. But yeah, I mean, some people are like that. And then I went and saw a house last week with a guy from China, believe it or not. Yeah. And I walk in there, like, "Oh, how you doing? Thank you for coming." Like shaking my hand, like no big deal, So
right.
Funny.
Yeah. Which I mean, I'm empathetic to folks that are being extra careful. And it's like, all right, like my dad's got COPD, so I'm like,
oh yeah, man,
getting sick and whatnot, and telling him to stay at home. But yeah, it's crazy because you see the whole spectrum. I'm sure, like some people that are out there and business as usual, other people
so true. I went to my office today because we're looking at a property. We're looking up for comps and stuff. And then I know I had this with you, so I came back because I brought my computer to my to home so I can get work done. And I'm like, shoot, I should just like you keep it in my office. I get more work done,
Everybody in the office all took their computers home, so they're all working from home. And I've got the home office set up where I'm working majority from home, but also have this here where I can come and, I don't touch any doorknobs. I don't, I'm just.
No, I'm not that. Like I said, I've been everywhere, looking at houses. So.
Well, I'm staying away from you then.
That's okay, man. But I'm okay.
Yeah, I'm fine.
Cool, well, man, I'm glad that you joined me. I just wanted to have you on here. I want to share this with so many people because I mean you're in the mortgage industry. For those people that don't know you, why don't you introduce yourself and then give them an idea of like the kind of volume that you do. So you're not just like a guy that just like got his mortgage origination license.
Yeah, I do a couple loans a year, and I tinker around in mortgage. It's part of a side project.
Yeah.
So I've been in mortgage for about 6 years. First 4 were in retail, and people who don't know the difference between like retail and wholesale, I worked for Mountain West Financial, great company, small West Coast company, and everything I did went through Mountain West Financial. Then a couple of years ago.
Isn't that the guy out of Roseville that owns a solar company?
No.
Oh, okay.
That's you're thinking of the guy who has like the commercials on the radio.
Yeah.
No, that's somebody different.
All
Mountain
right.
West, they're headquartered down in Southern California, Redlands. Gary's a great guy, the president, and they run a good operation. But 2 years ago, had some buddies in the wholesale mortgage space as brokers, convinced me to come over to the broker side. I won't go into details on why I think it's a better business model for me and my business, but been doing that for the last couple of years. And as a broker, I basically have access to 60 different wholesale lenders where, especially in times like right now where things are changing and certain companies are doing certain stuff, it's good to have options, where.
Yeah, and you're my go-to guy. So if you guys are looking at this guy, he's the one that I would go to if you have a mortgage or you need any kind of.
Am I on that side of the screen? You're on that side of the screen?
Yeah, you're on this side of the screen for me, so that's why I'm playing that way.
All right. Gallery view. There we go. Now I got gallery view. So yeah, I appreciate that. And, to just talk, like you said, about, numbers. And I think, it's not to brag, but like anything else, if you a realtor that does 100 deals a year, they are going to have more experience and have know more things because they've seen more things, right? And so
it's true. And it's interesting you say that because I just saw an article that Keller Williams is they're saying like all their new agents are going to go bye-bye because they're cutting commissions. They're also cutting what was it? It was profit sharing.
Wow.
And so unless you're a seasoned veteran, and I don't know if EXP is going to go the same way or not, but like just like you said though, like if you're brand new in this business, you're probably not going to weather the storm.
Yeah, which I mean, there's some good in that, and I'm not going to knock anybody, but when I was starting out in mortgage, I used to go, hound realtors to send me purchase business, and hound's probably a strong word. I was, encouraging them to use me because, I was trying to build the business, but I would go to SAC Association of Realtors and I would speak at their new member orientation. And this was 2013, 14, 16. It's crazy to see in an up market like we've had for the last, 8 years, how many new people join real estate. And I saw it where they'd have a class once a week, it'd be 40 people, and then they got too many, so they had to have 2 classes a week that were 30 and 30, then 40 and 40. Then they started doing it. I don't know how much they got up to, but Dave Tanner, the association president, was like, Matt, we're going to do it Tuesdays and Thursdays now. Now we're going to do it Monday, Wednesday, Friday. And I think they got up to like 1,000 realtors. And that's a long-winded way of saying, when you have that many realtors, X percentage of them are not going to be that great. And I mean, it's across any industry too, not to knock them, but if you do.
I train investors. I see the same thing. I have guys that come through some of my training, and it's like, some of them are superstars and some of them just, God bless them for wanting to take that stab at it and see if they could handle it.
Right. Yeah. I mean, my thing too, where I kind of, I don't mind if a realtor's brand new and they're starting out and they're all in, they do 6 deals one year and then 11 the next and 17 the next, where I have an issue on this subject is where somebody is doing it as a super side project. And I do this as my main thing. I also do this, and then I also do real estate. Well, that's fine. But if I have, somebody I'm referring who I want to work with the very best, someone who knows the most, I'm not going to refer them to somebody who does 5 deals. It's funny. I ran across an article I wrote in 2014 about why not to work with your brother-in-law as your real estate agent. And I wrote this little blog article to put on a realtor's page. And it was basically saying like, if you got in an accident where you broke your back and like your ability to walk was on the line, would you work with the surgeon that does 300 surgeries per year and is the field? Or would you work with a surgeon who's your brother-in-law by marriage and he's a nice guy, but he does surgery for fun on the side,
Oh, totally the brother-in-law, man. I trust him with all my whole life, man.
Yeah, I mean, he's a great guy. We got beers once a month or whatever. So
yeah, man, he makes a killer steak. I totally trust him.
Right. So we might have gone off track, but I think, without getting into specific numbers, I do a lot of deals, which doesn't mean that I'm a big shot. It means that I've seen a lot of stuff, so I know a lot of stuff. And mortgage, like most other things, the more you do it, the more you learn. And so, I've done a wide variety.
Also to that point though too, Matt, I mean, let's talk about this here. So let's say that, the example you brought up, the brother-in-law. So let's say the last time the brother-in-law did a deal was in January. What was happening in January that's not happening right now? Deals.
Right. Yeah, I know.
So, yeah. I mean, there's some valid, you're making a valid point as far as your volume goes. So, I mean, because you are doing deals and you're doing deals consistently, I mean, this is part of the reason why I wanted you on this as well. I mean, this is a mortgage market, update, but you said that you're on calls almost daily to see what new guidelines have changed. And if someone doesn't have their finger on that pulse like that, they're not going to know like, hey, yeah, 2 weeks ago you could do that, but you can't do that right now because X, Y, and Z have happened.
Yeah. And I mean, that's the thing too, why I feel it's an obligation for any professional in any field, mortgage folks right now, real estate folks right now, more than ever, get out and provide good information, because like you said, the person who doesn't have bad intentions, but just doesn't do that much business, they might have done something on February 22nd and they're telling people, they're putting it on their Facebook, hey, we can do FHA down to 580 with no reserves, whatever they're spouting. And they believe it because they just did one. They just did one February 22nd. But hey, if you were paying attention, pal, these guidelines have changed every single day, And so I've seen it many a times, and it's, the end consumer doesn't know who to trust or who to believe. And so they hear something, people believe what they want to believe. And so I've had too many.
They'll prove it wrong.
Right. I've had too many tough conversations though, where I go, hey, listen, I would love to do a loan for you. And I get paid when I close loans. So trust me when, I've got an interest in getting you a home loan right now, based on
we're across that finish line together.
Right. On how you're paid or what you made in overtime and variable income, whatever it is, we can't get a loan for you. Those people continue to talk to other loan folks until somebody tells them yes. The guy who tells them yes, and I see it all the time where it's usually not with bad intentions. It's just because somebody doesn't know any better. Yes, I can get a loan done for you. They think they can. They're using wrong calculations for income. They're not taking the extra steps to do a verbal verification of employment, whatever it is. And that person gets into contract, thinks they qualify. They're really they qualify. They pay for a pest inspection. They pay for an appraisal. They get 3 weeks into contract and then, sorry, we can't get a loan done for you. And, the end consumer is the one that pays the price.
Yeah,
That loan
they show the
officer was
cost.
just, oh, sorry, I thought I could get it done. They make up some bullshit excuse on
Now,
why
is
it
this still
happened.
true? When I was in the mortgage industry, this is what was happening. Like, let's say that happened, like this their lender for whatever reason dropped the ball, didn't do their job correctly or whatever it may have been, and they want to they come to you now. You're the professional. They want to transfer to you. That appraisal isn't transferred, or does it transfer to that person?
On government deals, it will. It's
Okay.
harder, and it's really company dependent on conventional
When I was
stuff.
in, when I went through the crash in '08, and man, appraisals were worthless. If you had an appraisal done, screw it, brand new one. Doesn't matter if the lender.
Right.
So you could go through 3 or 4 lenders and have to end up paying 3 or 4 different appraisals. But again, the market was falling so fast that the appraisal really was worthless.
It's going to be interesting to see what happens, coming up, because just to give folks a kind of quick update, like April 2020, guidelines are changing. And, I tried to do a video to give a brief overview. It's impossible to say, here's what the guidelines are, because every lender is doing something different.
Yeah.
But, to be fairly broad, guidelines are tighter. Where before we had a handful of lenders doing FHA down to 500 credit score, now you might find 1 or 2. I'm telling people to be careful with those 1 or 2 because they could change any minute. But
well, yeah, I mean, I have a guy that's that he told me. So a little backstory: we're buying a house, and the guy that we're buying a house, he's in foreclosure, and he's like, oh, real low income, real low stuff. And he's like, yeah, I'm going to get a USDA backed loan, and I'm going to go buy a home in an area that's way far away from here. And I've already talked to a lender, and he says, I'm good to go. I can definitely get this property. And I'm like, bro, you might need to get a second opinion.
Yeah.
You're in foreclosure right now. Your income is almost like he has a little bit of like disability pay, but it's very, very, it's substandard for living conditions here in California. Let's just say that.
Right. Yeah.
And but he's taken that to the bank, man. He has that pre-approval letter right in hand. He's shopping online like he's like
yeah.
tomorrow.
I mean that's something that people listening to this will find some value in. Approval letter is saying at this moment in time, I, the loan officer who signed it, or the company that gives it to you, believes that we can get a loan done for you if nothing changes. And what happens is, it's only as good as the data they were given. So if they were given certain data, your foreclosure didn't show up on your credit report, any of that, somebody thinks like, but no, I have the letter. No, the letter was contingent on information we have. We think we can get a loan done, and most good loan officers are going to dig. I want to know any foreclosures, even if it doesn't show up on credit report. I want to know exactly how you get paid. And that's why, I was telling my team, in this current environment, one of our biggest value adds is going to be how much work we put in on the front end with pre-approvals, because people are all the time like, man, you got to, reach out to my employer and get a verification of employment that breaks down base pay, overtime over the last 3 years. Yes, we're doing that for your own protection, because
well, not only that too. I don't know. Did you see the PennyMac article that just came out on Housing Wire?
I glanced at it, but I didn't see.
So for the listeners out there that don't know who PennyMac is, PennyMac is a loan aggregator. Basically, what they do is someone like Matt, his company, they originate the loans, but they don't keep the loans. Is that correct? You guys don't.
Correct.
You're not. Correct. So what happens is they sell their loans to an aggregator like PennyMac, and they put them all together. And then what they do is they bundle them up and they sell them to Wall Street. They sell them to your pensions funds, insurance companies, and stuff like that. Well, what happens is PennyMac, there's a clause that says if they don't make the first mortgage payment, then that loan gets taken out and it goes back to the originator, to that lending institution. Well, PennyMac just recently said that, hey, if in this bundle of loans that we've bought, if in the first 15 days someone raises their hand and says, oh, I just got laid off, I need a forbearance, they're giving those back as well.
Right. Yeah. And there's going to be a ton of unintended consequences with the forbearance issue. I'll speak on that real quick because it's a point of contention. I was on a podcast yesterday. My obligation as a mortgage professional to the mortgage industry is to say, listen, only take this if you need it. I care about the future of the mortgage industry and servicers and lenders not crumbling because too many people are taking advantage of it. On the other hand, I empathize with clients. I talk with past clients daily. And I have stories of both of them work in the restaurant industry. Both of them work at casinos. Both of them work where it's shut down. They cannot work. They need the help. And what I heard Barry Habib talk about this morning, which was smart, is
I
listen,
love Barry, man. I followed him right when I got in the mortgage industry in
yeah,
2003 with the Mortgage Market Guide.
he's the best. He's the
a
best.
genius, man. Yeah.
But here's the quick fix. If anybody would listen to him and his, expert knowledge, you need to make it where people need to prove they have a hardship.
Exactly right.
Because right now, one, the messaging is wrong. The messaging out there is like, hey, listen, we're passing these bills for you guys. We're trying to help you guys out. You can skip 3 mortgage payments, 6 mortgage payments. One, it's misleading because it sounds like it's something for free. It sounds like it's a gift. All you do is kicking the can down the road, and then you're in worse shape when all those payments are due. So
I have rentals, as you know. I have about 35 rentals. Yeah. And well, you do as well. I feel so gracious, and so thankful. I mean, I only have 3 out of the 35 that have not paid, and they literally legitimately cannot pay. They're in industries that were shut down completely. But at the same time, I have obligations to these lenders. Now, do I go back to these lenders and say I need a forbearance here?
Yeah, so the problem with that, they're still trying to iron it out. But I had a lot of people reach out to me, and I said, show me what the lenders are giving you. I'd love to review it and help you out and advise you. And a lot of them are saying, skip the next 3 months. In July, you'll owe us 4 payments. And my feeling, just like everyone I talked to, was like, what good does that do? That doesn't
do anybody any good. I've heard, I have not verified this, but I have heard that, oh no, lenders are just tacking it on to the end of the mortgage. That's called a modification.
Well, that's another issue too, is I've talked to people.
And I don't know anyone who's doing a modification.
Yeah, and I say, listen, that's great. That will give you the relief you need. And here's the thing. I understand that people need the help, and I want people, to have resources that can't make their payments if they're not working. But what's going to happen is, like you said, if you tack it on the end, and so many of these lenders, I've read a lot of these things because I've had people send it to me. And as an originator, the servicing and the back end stuff is not me, but I see it and I want to help people understand it because, they come to me as the mortgage professional. Yeah. But a lot of the verbiage talks about, you miss the next 3 payments and then we'll talk about options. And me as a consumer is like, I don't want to sign something today, get into something that I don't even know what the outcome is or what I'm signing up for.
Yeah, it's not like the Healthcare Act. You got to pass the bill in order to read it.
Yeah. And so here's what I'm really scared about is if they're all due at once, people are going to be in trouble and they're going to get behind. They're going to have late payments. They're going to foreclose, whatever the issues are.
All we've done is moved it 90 days.
Right. And if you move it to the end, like you said, and it turns into a modification, a lot of the verbiage I've read is if you're in an active forbearance, you're not eligible for refinance. My Correct. Worry is that I'm going to talk to my database later in the year, and I'm going to say, hey, listen, everything's shook out, settled out, you're back to work, great. Rates are at 3.1 on a 30-year fixed. Let's get you refinance, save $350 a year. Then I find
if they're in a repayment plan that takes 3 years long, they can't do it.
Well, yeah. I mean, if they're in forbearance at all, I believe some of the verbiage I've seen is they're going to be ineligible for refinance, which is just going to you took a little bit of relief right now, which wasn't really relief because they're all due at once. Or even if you took the relief where they weren't due till the end, but if you disqualify yourself from a true benefit of a refinance later, it's going to be painful. It's just, I don't like it when, the people who are spouting about the program are misleading the public, and it's hurting people more than it's helping people, because you think about it like, I'm not going to talk politics, but politicians like to say stuff that sounds good. So if the governor comes out and is like, I passed this thing where for 90 days, they can't foreclose on you and you're not going to have to pay your mortgage.
Or evict.
I mean, yeah. And here's the funny thing too. Fannie and Freddie, who, are government entities that hold.
Those are the only ones that have any kind of mortgage, not forbearance, but they're not foreclosing on properties right now.
Okay. But the forbearance piece, I looked at it. It's always been there. Fannie and Freddie, if you called them and said, hey, listen, I just got diagnosed with breast cancer and I can't work and I'm having issues, you can get a forbearance. So it's always been there. So
yeah, I've been doing that for years when I buy the houses I buy subject to.
Right. So, I mean, it's tough, man. It's so many people struggling in a number of different ways, businesses shut down and stuff. And so, what I feel is my duty is to help people understand the stuff because, it's going to have unintended consequences. People who don't need the help, if they think that it's like a free ride, or they think that it's something they just want to game the system, and they end up, causing damage to the mortgage industry or the servicing industry, that's a bad thing. It takes away from the people that truly need the help, which is why there's a simple little fix for it, is make it to where you have to prove that you need it.
So what is your suggestion? So let's say we're talking to, my audience is, they're investors.
Mm-hmm.
I have an investor who has had several of his mortgage or his homes that have been in escrow pulled. The people couldn't get qualified. Some of them were non-owner occupied, and I remember you saying something offline that jumbo loans and non-QM, that these are just gone. What about investor loans? Are those gone as well, or are they just
investor loans, like conventional stuff, are still there?
Okay.
But like you said, just to remind people of that, these debt service coverage ratio loans, bank statement loans, all those non-QM, literally like just shut off. I had some in process, 3 loans in process that they were just like, hey, listen, we're not doing those anymore. Good luck. And I mean, it was overnight, dude. It's crazy. But if you've got, verifiable income and you're doing, an investment property loan, they're still doing them. But like most loans, at least for the short term, guidelines are tightening. I had one in process where, it's just a cash out refinance on a single family, but the borrower owns multiple properties. And what they said was, in order to use the rental income on these 4 plexes that this guy owns, we have to have 6 months of reserve for each property.
Ooh.
So, $15,000 for that 4-plex, because 6 months of PITI, $18,000 for that one. It ended up being, because they wanted
more than enough cash to buy it outright, man.
Well, yeah, and so some investors don't just have $60,000, $80,000 sitting in the bank. So they're adding those type of overlays, which when you think about it from a lender's perspective, okay, it makes sense. If this investor owns 5 or 6 properties, they're doing a cash out refi. As the investor, I want to know this person can pay things back. And part of being able to pay things back is if stuff goes dry, they've got reserves to pay those payments. So you'll probably see a lot of those change over time, and some of them will probably stick because.
Talk to me about FHA loans. I've heard conflicting information that FHA has raised the credit requirements as far as FICO scores, but also they have gotten rid of any kind of down payment assistance programs that used to be out there, and they've also increased the reserves they're requiring to do an FHA. Again, these are all unverifiable. These are just different things that I've heard from different people, and I want to hear it straight from the horse's mouth.
Yeah. So as a broker, I've got access to tons of different lenders. So I get to get daily updates. Lender X is doing this, lender Y is doing that, and I can use real names just for reference. Like UWM has got their overlays, what they're doing on government loans. Home Point has theirs, and so there are still lenders going down to 500. And FHA, they have their specific guidelines, and then lenders put in their own overlays over
their own risk tolerance.
Risk they want to take, right? Yeah. Some of them, UWM for instance, is just saying we're going to cap our debt to income ratio. Where FHA used to go up 55, 57, 58%, we're going to cap it at 40% if you're under 680. If you're under 680 credit score, yeah, wow. Back end at 40%.
Which front end is it? Still 33 or is it lower?
Whatever DU is going to approve, but I'm sure it's probably like low 30.
Yeah,
at the highest. But 40%. Back end, and then if you're above 680, you have to have 3 months of reserves to be able to go up to a 50% back end.
Well, that makes sense.
Yeah, and that's the thing too is some of these overlays. That's UWM. Other lenders have other overlays. It makes sense. I deal with borrowers where I would love for them to clean up their credit a little bit, have a few months reserves in the bank. That's not a bad thing. For some people, it's going to feel like hey, that's unfair. You're telling me I don't qualify. Well, they're trying to set you up for success. They don't want you to foreclose. It's a strain on banks to foreclose on people. And based on, risk factors, if you have zero money in the bank, you've got a 642 credit score, chances are more likely that you're going to foreclose than somebody who's got money in the bank and who's a 690 credit score. That's just, They got data on that.
Right.
And so,
Yeah.
you've got that. You've got other lenders that are still going down to 580 and, DTIs up to 45. All of them are different. I think somewhere I saw Wells Fargo just made their minimum 680 across the board on all FHA. So they don't even take anything under 680. So it's different everywhere. The consensus, I think, amongst a lot of mortgage pros is once we get through all this, people are back to work. Lenders can breathe a little bit and probably loosen those guidelines a little bit. I don't think, and I would say I would agree with not going back to where we were, where somebody with a 582 with no money in the bank could just get a 3.5% down FHA. It's not responsible lending, and along the same lines with.
Well, let me challenge that though, because I mean we've had a lot of lender guidelines over the last several years become loose because they wanted a piece of the pie. But let me say this. Let's say some of these banks have liquidity issues, and what's to say that they wouldn't just lower the guidelines and get a flood of new loans so that they can shore up some of their financial resources?
Yeah, I mean they will, and that's the thing too. It's going to be certain lenders that are going to say, "Yep, we want this stuff." On the wholesale side, Carrington comes to mind. Carrington is a lender that wants,
I'm working with a property right now with Carrington that I'm taking over, man, and oh gosh,
they might want 37 additions on every file you send them, and they want to have a 2-inch thick file of things, but they'll do it. I wanted to answer your question about down payment assistance too, because I saw it, and as the non-QM dried up, the jumbo dried up, it only made sense that 100% financing, which is generally the riskiest financing when someone doesn't have
would go away as well,
is going to go away. A lot of the down payment assistance programs have said temporarily suspended, and so I think they want to leave it open in case things go back to normal. They can. They haven't canceled.
I mean, you have this housing issue with affordability and everything else. I think it's going to be hard to keep that away.
Right. Yeah. I mean, and that's the thing too, is I've always thought that if you've got a really strong buyer and the only thing they have an issue is with getting down payment, then you should be able to lend on that. And what Cal HFA, which is the #1 in our area, Northern California, for down payment assistance, what they started to do was they went from 640 to 660. I think they were proposing going to 680 when they were doing their DPA program. But if you just got more strict and you said, hey, listen, we're going to do down payment assistance, but we want, some reserves, because they've always had those strict debt to income ratio.
Oh, I know.
Things,
yeah.
Right. Where if you put 3.5% down FHA, you could probably buy for 350. If you did down payment assistance, you might only qualify for 280. Their debt to income ratio is going to be 45.
And there's no rate buy down either with them either, so it's like you can't get around it.
Yeah, and they're when they say 45% back in, it's 45.1. You don't qualify.
That's right.
So they had a box you had to fit in, but just personal feelings. As I see a ton of different consumers come across my desk all the time. Somebody who's got a state job, who's got a 722 credit score. If they use down payment assistance, I don't think that's a risky loan. They've got a stable job, they've got good credit. It's just, most people, especially when they're just starting out in the workforce or just creating families, like $15,000 is hard to save. And I understand that. And so, that's the part of me that says, hey, listen, there's a certain segment of the population that could really benefit from down payment assistance who want to buy a house and who should be able to buy a house. But, somebody who's, got credit, got no money in the bank, trying to use down payment assistance, it's higher risk, and it's a recipe for disaster. I get paid only when I close loans, and I still have plenty of conversations where I tell somebody, hey, listen, I'd love to put together a plan for you where next year, 12 months, 18 months, you're in a great position to buy. If I were you, and kind of lay it out for them, get some of their stuff situated, get their credit situated.
Let me ask you this. This is kind of self-serving. So let's say I have a home that I just offered to somebody on a lease option, and they're working, quote unquote, they're working on their credit. They got a 2-year window. I mean, Would it be fair to send someone like that to you at this point, where we know that they're not going to have that, they're not ready to buy, but you're already, being overwhelmed with everything that's happening, and then to throw on top of it someone who's not qualified to buy today, would that be, would that be a burden?
Yeah, I'll speak for myself personally, and I would hope that a lot of folks stuff is flying in the background. A lot of other loan officers are in a similar, boat where, I've got a great team around me where I want to have those conversations with people early. And I'm, right now in this current environment where realtors can't show stuff, I'm making calls all week to realtor partners saying, hey, listen, let's really serve your clients and let's start talking to the ones that are going to buy in 60 and 90 days, really educate them on what it's going to look like, and show them 375, 400, 425 purchase price, what that looks like. And, educate the heck out of them so that when the floodgates do open, people are out and able to shop for a house, that they're ready. So somebody like that who's 2 years out, with staff that I have, it's relatively easy to say, hey, listen, let's take a 5-minute call, a 10-minute call. I'll give you some advising. We'll check in every few
You
months.
look at the credit, you tell them what direction they need to go to close accounts or pay something current or whatever it may be. And then maybe it's 18 months.
We've got great resources. Yeah. Somebody who's serious about it and says, hey, listen, I want to be ready to buy in.
Well, they better be, because they're in my house. So they better be serious.
Well, you might want to write into the contract that they've got to sign up with. There's a guy, Sam Parker, who's my credit guy. Look him up online. The guy's really good.
All right.
It's got to be part of the clause that they got to buy into his credit, because the guy's a genius. He knows credit repair better than anybody.
Yeah.
And so he'd be able to help them out. And, I have conversations with people all the time where, hey, Matt, I got to be transparent. I'm probably not going to buy for another year. I want to do this. I want to do that. And I go, listen, let's have the conversations though, because the more I'm able to educate folks and empower them, the more committed they are to us as a client.
I love this saying out there. It says, he who educates dominates. If you're educating the marketplace and they have this trust because, man, Matt gives me so much information. This other guy down the street doesn't give me crap. But man, he's always just filling me with information. When they are ready, when they finally are ready to pull that trigger, who are they going to go to? The guy who blew them off, or the guy who always gave them, the time of day?
Yeah, and I'm telling you from experience, it's a pretty cool feeling to be busy enough where you're not stressed out and worried about the next deal, where I can talk to tons of people, give them all great advice. I won't even look at the metrics to say, hey, I spent X number of minutes talking to these people and only 4% of them end up using us. I don't care. I know that, you give value and your business grows, whether it's mortgage or whatever it is. And so, I'm having conversations all the time. I'm having plenty of conversations right now around forbearance, around all this stuff that has nothing to do with me originating.
It's not going to affect you immediately at all.
Right. I'll tell you a cool story. I'll tell you a cool story on that too, with just giving value with expecting nothing in return. I, used to do the Mortgage Mondays on YouTube, and I should plug Matt the Mortgage Guy on YouTube. Anybody who's not subscribed should be subscribed.
Right there, you heard that. Matt the Mortgage Guy, YouTube.
Yeah. I think we're at 990 subs, dude. We're going to have 1,000 subs, which, to my kids, I'm a nobody because, all those YouTubers that have 1 million subscribers, I'm no Mr. Beast, but I'll get that.
Yeah, my kids love Mr. Beast. Yeah.
He's the best. So get a bunch of content. It was all meant to just be, here's good information that hopefully helps somebody. Keep Your Home California. Were you familiar with that program?
I am, yep.
It was great. There was billions of dollars in this fund to truly help people out. So I put out a video, gave people kind of information on how to utilize it, what kind of programs they had. I talked to plenty of past clients who had used it, and people would ask me, are you affiliated with Keep Your Home California at all? I said, no. Do you get anything from it? No. Well, why are you doing it? Because I might help somebody. And who I helped start to finish. Super nice guy. And I remembered him because I talked to him 7 or 8 different times. And he was super grateful for, being Keep Your Home California would pay 24 months of your mortgage payment. And it just showed up as being paid. It wasn't even it was a cool program. But anyways, a year and a half after I helped him, he referred me his sister who did a refinance. And then about a year after that, it was a friend of his sister's. And so now there's these referrals that came from that. And it was nothing more than I'm putting out information that's going to help people. And, I'm not telling them after phone call number 7, hey, if you've got mortgage stuff, call me. Make sure that, you know, you send me a referral for this. It just happens, you know, and it's like, you know, it's the universe karma thing, I guess.
Well, I think that's the, you know, that's what we're doing these videos today. You know, I think it's a good place to go ahead and just, you know, segue out of this and say, you know, thank you for your time. But I mean, it's up to you if you want to do it again, like in 15 days or 2 weeks, if the market changes enough, you know?
I'd love to do it a couple times a week, especially right now when things are changing so fast. Like, I feel like there's, you know, no amount.
Or, I mean, or if you're already doing something on Mondays called, you know, Mortgage Mondays, I mean, that could just be, I can just point my people that direction as well. So you're not, you know, taking up too much of your time doing multiple stuff that's like, you know, redundant for what you're.
Yeah, I'm actually not doing that anymore, but I was.
Oh, okay.
When I first started doing YouTube, had to commit to doing it with some frequency, right?
Yeah,
so
for sure.
I did Mortgage Mondays, and I just told myself I'm gonna do this every single Monday. I think I did it for a couple of years because I got up to like Mortgage Monday number 120. And I'm like, you know what? I'm done with Mortgage Monday. I don't want to have to like know. And over the last few months, I've actually put out a couple pieces per week. So it's just whenever day they kind of fell. Right now, I'm really trying to ramp up more YouTube stuff because I feel like it's important. But you know,
what I'll do then is I'll share this with on my Facebook. I'm gonna put under Investor Ryan Nickel, and I'm gonna share with also my Bootstrap REI group. But I will send you the original.
Cool.
Depending on how big it's gonna be, I'll give you the link though. You can go ahead and you can upload this to your YouTube as well.
Okay, cool. Thanks, man. It's good talking to you, brother. I love
you as well, man.
Talking to local folks and just chatting. You know.
So if someone wants to get a hold of you, what's the best way for them to get in touch with you?
You can send me an email at matt@mattthemortgageguy.com or cell phone 916-529-7600. Usually better to text. Sometimes, you know, I'll be.
Go ahead and repeat that one more time.
Which one? The phone?
Both of them, yeah.
Okay, yeah. So my direct line is 916-529-7600. It's my cell phone, so you can call or text. Text usually is the best way to get me there, or matt@mattthemortgageguy.com. And the email works really well because I got an office manager that's helping me weed through them and figure out which ones I need to tend to and respond to. So
when I grow up, man, I want to be you.
It's good, man. It's fun to help people out, man. And now is a time more than ever, dude. People are, you know,
it's so true
with a number of different, you know, concerns, but hopefully, you know, within a couple months, we'll be looking back on all this. You know, I think about my kiddos, man, when they're looking back like 40 years, this time where they're
that time when the world shut down.
Yeah. We had a 7-month-long summer break, you know.
You know what's funny is I often think about that song, you know, Where Were You When the World Stopped Turning, you know, about 9/11. And I'm like, that was such a horrible, I mean, for me, like emotionally traumatic event that happened in my lifetime. And I'm thinking, I'm like, the world didn't shut down like it is right now. Like New York did, the stock market did and stuff like that. But this, like, the world like really stopped turning like for this this pandemic. I'm like, holy crap. Like, this is like, where's it? What songs are going to be written about this?
I know. I find myself too, like I was telling my wife, every few days I'll be like, oh, like, wow, this is really happening. You know, like you almost forget.
Yeah.
Like you're in a Netflix movie that you know, forget that you're in where,
some of us are still working. So yeah.
Yeah. And that's the thing too, is like, sometimes I'm distracted because I'm, you know, blessed to be able to still work from home and do mortgage related stuff. You know, but things have changed. That's for sure. A lot more, you know, playing out back with the kiddos, watching movies. You know, this weekend we ordered WrestleMania, and I hadn't watched a WrestleMania since the 80s. Both my boys were like, I don't know, dude, they're such geniuses, bro. Everybody's at home, and it was a 2-day thing. So you had to order Saturdays and Sundays and pay for both on pay-per-view.
Oh, man, dude.
Those guys are some savvy businessmen. They did it with no fans.
Well, you know, I mean, like, you're right. You're exactly right. I mean, Vince McMahon he's the absolute genius. His father was the one that congregated. There used to be like regional wrestling like groups, and he was the one that like put them all together into like the World Wrestling Federation, the WWF, way back in the day. So like, talk about marketing like geniuses. I mean, he comes from a long line of just brilliant guys, like P.T. Barnum style type of marketing.
Yeah, I was watching it with my kiddos. I don't think it was quite as good as, you know, Macho Man Randy Savage and Ultimate Warrior and Hulk Hogan and stuff.
Yeah.
It was all right.
Well, that's cool, man. Good for you. What a fun dad you are.
Yeah, it was fun. It was good times.
Awesome, man. Well, I appreciate you. I'm going to go ahead and end this and get this out to you. And then you just let me know when you want to do it again.
One in a couple weeks, dude. I mean, especially when things are moving so fast, it's good stuff. And I love
Today's the 6th, so let's just say the 20th. In 2 weeks?
Yeah. 2 weeks sounds good.
Awesome, man. But if things like really come to a head and like things go crazy, we can do an emergency one.
Okay, for sure, man. I'm down. Thanks,
Awesome,
Ryan.
man. I appreciate you.
Yeah, I did. Later.
All right, thanks, Matt.